The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show Thursday night here in Asia. I'm assuming that's Thursday morning in the good old USA and that continent way over there. I'll tell you what, we had Steve on the phone on the show yesterday, and he had the visuals where he's at in Chicago and all that, and that was just a true pleasure. But, you know, one of the things that, you know, it's always a good, you know, kind of review for me in general to hear somebody else restate what some of the kind of the trading rules are, the trading mantra, if you will, on using our information. And Stephen, like, we feel like complete idiots if we do something against the simple rules that we kind of go by trading some of the profile technology that we have. So it's always good to kind of get an affirmation of faith kind of thing with talking to Steve, and he's been in the trenches with us for a while now, and I really appreciate everything he said yesterday. Sorry we didn't really get to quite a few of the instant analysis, regular, usual suspect type looks that we go on a day-to-day basis, but we're going to try to get back into that today. I tell you what I'm starting with, though. You know, I know the markets are a little all over the place, and I know we've talked about, you know, the risk is to be long, and now we're back at that inflection point on the S&Ps. But I want to kind of take you a little bit out in left field at the beginning here, and I want to pull up Whole Foods. Now, there's been a lot of, you know, noise around this stock lately. The scanner has really put it on our radar screen, and this is our daily view on Whole Foods market. And, you know, I think Tom was even saying it one time. You go in there and get a chicken leg and a pint of coleslaw, and you're out $30. And I never really knew how long that would last. But, you know, it was a high climbing stock for a long time. But the scanner really had pointed out that it was kind of okay to be short, not okay to be long for a while when we started breaking below that, you know, 55, 56 area. And one of the things that, you know, we always try to look at is, you know, where do we break down on our long term? And this kind of goes in tandem with what some of the things that Steve and I were talking about yesterday. We use crude oil weekly as a primary example of this. Let's stay with the trend. Let's let the profiles regulate the trade. And let's actually let those profiles let us know when we find out when we're kind of having some technical damage in the wrong direction of that trend. So Whole Foods broke stride, started using the dailies to regulate the trade down, to trade breakouts and sell resistance. In the middle of this, you had a market that continued to drift higher. So you had the relative strength trade MO going on Whole Foods, and you've also, you know, been able to use the support and resistance levels, if you will, or in this case, the breakdown and resistance levels, if you will. Whole Foods is showing its hand again. You know, we kind of, you know, had some north moves on the S&Ps recently. We look at Whole Foods trying to catch those resistance levels as the market brings and lifts that stock up to those resistance levels for us. We hope that we get into those inflection points, and that inflection point recently, not to mention some of the ones from the past, has been 49.83, and last week we reached a high of 49.82. So the reason I'm pulling this up is it always doesn't happen to the tick or almost to the tick within a penny, but you're going to have noise around these levels, as you can see, but you're going to be able to use these levels to orient stops. And that's one of the things that Steve and I spoke about yesterday also was, where's the risk? How do you temper the downside? Where do you feel completely dumb being long or being short? based on where we are relative to profiles. And, we look at these levels saying, and we talked a couple times yesterday about let the market come to you. Now, S&Ps drag us north. We get into these inflection points. The markets come to us, and we're placing stops around these. Now, this is a little bit of an education here, but as this particular stock pans out, we're going to be able to trade the breakouts above, trade the breakout below 48.67, and now we're just kind of dangling in the wind down here. And pre-market, we're trading 41.44. So this is not even reflecting what's going on with the current price action of the stock. And let me try to get this to where we can. Oh, that kind of screwed everything up. Okay, here we go. So as it showed its hand, we're a big fan of not trading before earnings and major announcements, but now Whole Foods is trading down here. All right. So a little bit of an education on this, a little bit of a review. We're going to get into the markets now. I'm going to read some of the text on here. And okay. All right. So here we go. All right. So we're going to get out of Whole Foods here, and we're going to get into the S&Ps really quick because I know that's what the analysis should be on here. All right, so we reached a low this morning of 2057. All right, so here's the weekly on the June contract. We talked about, because of this scenario, if you just joined the show and you've been living in a cave and not watched the show, we've been looking at the ambiguity of the breadth on our S&Ps for a while, for weeks actually. We've been talking about, what's the risky trade? The risky trade, in our opinion, based on this disconnect that's been going on in the internals, the risky trade's been to go long. And look what happens so quickly when we start getting some consistency and some congruent speed dials, if you will. Remember, these are breadth charts as you click down into these. And we had a big conversation with Tom and Tommy yesterday about getting this out to you. So I'm going to continue to fluff this up until we actually get it in your hands at TFNN. But as we look at these numbers and as we look at the internals and what's going on over here with our breadth relative to our task profiles, we're noticing now that we're getting very, very consistent on this on the short side. So let's take a look at this. As we've reviewed that, let's take a look at the technical analysis on the S&P futures themselves. So weekly, we've come down to 2063 and 2068 being the targets down below. If you could have caught an offer here on the 240s, that's all you had to hang on to the other day, around 21 to 3. That was a little bit of a clear time. It's okay to get back in the water on the short side. Let somebody else battle it out up here. We're getting down into a bottom of the balanced area. All right. Now we're using the 240 to regulate trade down, and we're talking about long-term inflection point targets. Why do we have 2063 and 2068? 2063 unfair highs on the weekly, 2068 unfair highs on the day. DMZ was our target-rich environment. We've gone down here. We've overshot it a little bit. That's okay. Long-term inflection points are going to have a little noise, and now we're back above. So, what do you do now? We're going to take a look as we have met targets. We want to look at closes for today now. Now, you might say, well, man, why would not just short this thing because the breadth's negative and, let's just put some trailing stops in and blah, blah, blah. Well, now that we've had that major move, and on the weekly, I'm going to pull this up again. Today's Thursday. And as you know, we got a big report tomorrow. As we pull up this weekly, a Friday close is going to be really important, but a daily close is also going to be really important because we haven't had a daily close below that DMZ. Now, again, the question is, what do you do now? In my opinion, we've had a good pullback. We've called this relatively well. We picked a target-rich environment, and I think right now you've got to just let somebody else try to shove the down This is a big report tomorrow. You guys know that. And just sit tight. Let's see where we close today at least. And then we can kind of get our bearings again. So that's the trade, in my opinion, on the index itself. Now, as we look at the NASDAQ, we got below 44.62 and 44.37, and then you kind of heard the whoosh sound. So again, we've got a similar situation. We've overshot the inflection points. We're trying to poke our head back above this NASDAQ daily unfair low. We've met some targets. We talked about those targets well down here around 43.70 and ultimately 42.41, but we haven't even come close to that. So right now, I think it's somewhat of a waiting game. And I know if you're sitting in front of the screen all day and you got the coffee going and you've cleared the desk to try to get in some trades today, it's sometimes you got to watch cartoons and just kind of sit on the sidelines. And this is kind of one of the times. I mean, do I think it's a great time to buy the bounce? No, I do not. I'm not a big fan of buying any index futures right now because of this situation. And I know these things can turn, but let's let them turn first. Don't be a hero. Here we go. Let's take a look at the DAX, and this is kind of significant here. We're getting, this 11,430 area, a big number for the DAX. Obviously, a lot of things are going to shift around today. We're also looking at the euro relative to this. FTSE took a pretty good haircut today. Let me pull that one up with the I always get the symbol wrong on that. I don't know what. Yeah. I mean, we're getting kind of the all-day commentary on this as it happens over in Asia. FTSE took a really good haircut today, and let's take a look at the pound and the euro relative to those two instruments, basically the DAX and let's take a look at the euro first. The dollar's kind of having a little bit of a bounce here, and the euro's pulling back. But let's kind of look at what we were speaking of before. This is our long-term weekly on the euro. And we talked about, again, we just kind of sounding like a broken record here a little bit, but close into the fair auction. All bets are off on the short side for a while, no matter how fundamentally bearish I get on this product. And we talked about, 115.34 is not out of the question. It hasn't happened, doesn't have to happen. You just don't have a lot of direction here. We're going to take a look at this a little bit deeper when we come back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're kind of getting into the Euro here, and maybe what do you do with this thing? This was kind of the telltale sign we were going to ramp up. We talked about this yesterday. Profile appearing below price action. Got right into that previous unfair high around 110.5, 111. Ramped up. We're doing a little bit of a reversal right now, but this is the news here. 240 unfair high here. Battle point. 112.91. Sitting there. As you can see, this box outputted ahead of time, and you've also got 112.12 sitting down here. So, in my opinion, you've got support here. Euro's gone pretty far, pretty fast. It's a support area for sure, and you got another chance to pick a battle down below around 112.12. All right, so you got to. If this don't work, the next one may be a decent place to pick a battle on the long side on the Euro. This thing may not be ever, folks. I mean, we could climb into that 115, 30, 33, 34 area. All right, we're going to take a look at the British pound really quick. Here's the situation. A lot of emails about this. Let's use taking a haircut. What do we do with the pound? Is there any play here? No, there's not. That's the answer. The simple answer to that. There's nothing to hang on to here on the daily. 240s have had some short-term opportunities, but again, I'm a big fan of trading the longer-term inflection points, and there's just not a lot here, even in the 240. And are we having some connection issues, Al, right now? to reconnect or not now? Okay. All right, we're gonna try to keep going through this here, folks. Sorry for the connection issues. The yen, again, this has been one that I've been a pretty big fan of on the long side. I want to stay with this. I love the way it's acting. I still love trading 119.60 breakouts above there and buying 118.76 support areas on the Japanese yen. So we're going to take a look at the dollar now, king dollar. Not really the king of currency amalgamations right now. Here we go. Here's the weekly. Again, that got to get back above, to get back in order, got back above 95.47 on the long side. Not happening. Nothing to really write about right now, even though we're having a pretty decent little bounce right now. Here's the really, this is another kind of a little bit of an education here. As we're looking at the weekly and the dailies, we don't have anything down here to hold on to, and we know kiss that area, profile appearing above, bearish sign, very bearish, as we talked about yesterday and the day before. But, what do you do with this down here? You drill down into a lower time frame, and you use those profiles on a lower time frame to regulate this trade. And here we go. The 240. And a lot of our automated systems will actually take profits when a new that's one of the exit strategies, is when a new 240 box appears. If we're in a trade down, a lot of times you may want to just, and especially when an orange bar is appearing like that with a new chance of a profile appearing, we'll take some profits. And as we look at this now, you've got resistance levels at 95.07 on a short term, and then breakdowns below 94.09. So, the good news is if you're using this type of methodology to bring some sanity to your trading, when we have these new profiles appear, those are considered most of the time some type of target being reached situation. So it's called a new demand area appearing when we're in a downtrend. Okay, and we'll read some messages here. All right, so we're going to take a look at Tesla really quick. And as we look at this, I guess they lost less money than they were supposed to. Pre-market looks like 224, if that's right. Is that right? We're going to confirm that when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. there's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I got Tesla up right now. We talked about some of the pricing. This is for real 224 approximately. Here's the daily. Guess where the unfair highs are? 224, 279. I know we've rattled around here, but we've kind of settled back up into these unfair highs or down into these unfair highs. And as the market opens, at least you can use this rocker arm to make some kind of sanity out of what's going on with the earnings announcements here for Tesla. Now, we also might have any market help on the way down before this unemployment report tomorrow and a couple other things that are coming out. So Tesla could just kind of, rattle around here, but that's the battle point that I'm going to use for Tesla. Let's take a look at Amazon. Okay, so 424 is what I have pre-market, and as we look at this, well, hang on to this has kind of been something we've been having to drill down into the 240s for. So 424, keep that in mind. Again, earnings, we're not a big fan of trading earnings. And let me just make sure something. 424. Okay, yes. So what do you do with this? In my opinion, you've got nothing to really lean on that's a long-term or intermediate-term inflection point. I would pass on trying to make any sense out of Amazon right now. We're going to take a look at Alibaba really quick also. These are kind of the superstar earnings announcement type of stocks right now. So trade about 88 pre-market. This is the situation on Alibaba. So where are we at relative to profiles? So this is kind of interesting, and that this is, what you kind of have had to been waiting for. Here's the daily chart. If I get that to come up, I'm really apologizing to you guys for the technical issues here today, in 40 screens or things like that. So here's Alibaba. had a nice opening, nice IPO run up, and then we just done nothing. It's up, sell off. But where are we at pre-market? We're trading 88. So if we can close above 86.40, then you might be able to utilize that as support to trade Alibaba higher. Now, again, what's the good news? The good news is you know where to say uncle on this type of scenario below 86.40 on the long side. And you got to, again, figure out where this is going to close. Market may help this thing stabilize today. The market may not go down, being the broad market. Let's go back to that really quick. Here's the S&Ps. If you joined us late, we've satisfied that DMZ target on the downside, 2063, 2068. Here's the situation on the dailies. So, you know, we may just kind of take a little breather from getting hammered here on the S&Ps, and that may allow some of these stocks to stabilize, especially Alibaba possibly stabilizing above those unfair highs. All right, we got to look at Big Blue here. All right, so interesting, and this kind of is case in point. This is kind of case in point of what we talk about all the time, right? Let the market come to you. And IBM, this is, I had to pull this up because, you know, we kind of know we were a little bit in breakout mode here. We kind of had to ignore the short side for a while after we, you know, we're just kind of clean and clear of the daily unfair highs here and going back and retest them. Kind of a launching pad little situation here we wanted to stay away from on the short side. But now, yesterday, we came down and looked at this 169.01, and that was a preset inflection point. I'm going to see where the low is yesterday, 168.86. So, you know, what is that, 15 cents? And you, again, want to wait for the market to come to you. The market gave this thing some significant help. And what do you do with it now? I mean, I think looking at how this thing has acted, we were hoping for the longest time to get some help from the S&Ps to drag this down, but we had a little bit of a rally. You know, the S&Ps, obviously drifted higher significantly. Actually, here's the weekly on IBM. Do you trade this bounce? I mean, that's the eternal question, I guess. And as we look at this with the daily, this is what I'll say. I'll say that I'm not a big fan of going short it right here. And I'm looking for the short side. So I would want to see rallies up into, and we had a rally up there and we had to close, and, you know, I got stopped out of this trying to short it, but I got back in the game below 175.13. Now, I took this off a little earlier than waiting for it and hoping that it would come down to 169, but, you know, would I want to get into a short right now? No. How would I? What's the next inflection points that I look to short this particular stock? In all honesty, I'd probably for some daily closes now to happen, and those daily closes would need to happen below 169.01. Now, from the long side, if you're looking at this from the long side, you do have a little bit of an opportunity here. It didn't want to be near these inflection points down here. You can place some stops oriented below 169.01 for this to move higher. My personal opinion is that the market is going to drag this down, and this particular stock is going to have issues again. And getting below these daily profiles like we want to see this thing is going to be very good for the shorts on this. But, you know, we kind of have a little bit of a short squeeze. Market drug it up, and that's the way things happen in trading sometimes. All right, we're going to go back to something that's been on the radar screen really quick, getting through some of the usual suspects. Get this out of the way. All right, June crude. Here we go. We talked about not being a hero on this one. I'm going to wait for this to kind of happen here. This is our 240 profile, 61.4 up top, 59.92 down below. So let's call it 60 and 61.44. Still rattling around. Came off our highs yesterday, which were, you know, a little bit higher than where we're at right now, 62.50, 62.60. So what do you do with this now? We talked about the only time you could probably get back in the water on the short side is at least getting back down below 59.9060, which is coincidentally the bottom of our 240 profiles also. So that's going to be a significant area for this price action to get back down below, to start looking at this by any means to go short. Right now, you're still looking at this as a long candidate, believe it or not, with stops below 60 based on your appetite for risk. Why? Because we haven't, I mean, I'm looking at our navigator, I'm looking at profiles, I'm looking at short-term profiles. And this is, you know, a product and a result of what we were talking about a month ago, and maybe a little more than a month ago, by a lot of these hedge funds getting short. This is a little bit of a short squeeze, a little bit of a change in tone of some of the fundamentals. And obviously all these guys aren't out of this. So again, is it time to short crude oil? At some point it may be, but right now we have no conviction to step in large or lightly to get short this thing. Get this out of the way. Here we go. Okay. We're going to take a look at gold really quick. If you've been watching the show the past couple of days, we've talked about maybe opting out on the recent longs on this, and we got a good bid the other day. We took that off around 12.15, but you know, we talked about not buying the most recent bounce situations on gold because the dollar caving in my opinion, should have had a little bit more relevance on this. And some of the systems that we have going there are not really pointing that this is going to be something where we back the truck up and put it in our grandkids' retirement or college fund, excuse me. So, you know, what do you do with gold now? You got a little bit of an opportunity down here at 1173, and that's combined with 1171 on the weekly. So you've got a daily, weekly situation down here that you need to pay attention to. Just like last week, we reached a low of 1168. We kind of got into that weekly on for a low and bounce. You'd really like to see these get into these areas and stay away from these areas. This is a little concerning, especially with the dollar doing what it's doing right now, coming off kind of recent all-time highs. So, you know, what do you do with gold? You know, unfortunately, this is one of those situations that Steve and I were speaking of yesterday where you don't have a lot of leverage here. You can try something at 1171.73 on the long side with stops down below, but you know, gold's looking a little heavy here, guys, and the dollar, in my opinion, should have made a lot more gold bugs happy with this, and this is going to be something they may pull the rug out, and I just don't think that you got a lot of leverage here right now at this moment with gold on the long side. So I'm changing my tune a little bit. If you've been watching the show, you know, been a big fan of trying to find opportunities to buy gold all the time, but right now, you know, we may have a little bit of a down below 1171 on the weekly on furloughs, and you know, then we just can kind of regroup and figure out what our next battle plan is. But that's this one. All right, let's go into the 30-year really quick, the June contract. All right, so we kept reached at 152.14 on the weekly. We've gotten smoked here on the daily. 154.21 pre-market. So, you know, what do you do with this? I've been a fan of buying treasuries for a long time, and we had to sit on the sidelines when we started having some technical damage on this particular product. But what do you do with it now? Are there any trading opportunities? Again, I want to see some new intermediate information appearing down here to really give me something to lean on and to more importantly, place stops around. So, you know, again, the 10-year, the 30-year may be something where we just have to kind of sit tight and dream of better probabilities. I'm going to look at the XLF. If you've been watching this show, you know I've been somewhat bearish on this at times. Had a little bit of a stop out the other day, getting above 24.50, not a lot higher, 24.70, 65, somewhere in there is where we reached. But right now, it looks like it's getting to be okay to get back in the water on the short side. I'm a big fan of putting stops above 24.50 on this, and just seeing if this thing can unwind a little bit. Now, rates going up are not terribly bad for this particular sector. I mean, the yield curve widening is what they need in their business model as one of their revenue stream components. So again, things are changing a little bit. I don't know if they're going to continue to stay changed, but some of these financial stocks are going to obviously love the widening spreads. XLE, we got to take a poke at that one. So again, crude oil, the XLE kind of pulling back a little bit more, but where do we pull back? Pull back into 80.94. Those unfair highs are 80.87. So within 7 cents, we caught this pre-market on the XLE. We're trading, and we talked about maybe trying to find those trading opportunities on pullbacks. We've kind of played that game before. We're trading 81 to 866 pre-market, so a little bit higher than this. Here we are, 5, 6. Let's see this. Hold on. Okay, so what we want to do with this, in my opinion, keep turning the wrench the same way. Stops below 80.87. Long-term stops below 80.07. Turn the wrench the same way, buy the dip. Crude oil, if it starts breaking down, you'll know it for those inflection points. Okay, we're going to take a look at July silver. Okay, so populating here. Here's the situation on the daily. Again, rattling around support here, but considering my feelings on gold, silver, a little bit of a sympathy trade here. I'm not a big fan of buying this dip around these 1625 unfair high inflection point levels. So I think, I'm just, wanting to sit tight on this particular product. I mean, here's a 240 situation on silver. Not a lot of direction here, not a lot of things to lean on. And pre-market, we're trading 1621 right now. So we're gravitating slowly below 1625. That's not good. Again, that could be considered a noise level, but I'm kind of opting out on trying to buy the dip on silver right now. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're going to take a look at Apple, and this is getting, a little interesting, but on the long-term view, let's just kind of back up. Are we super concerned at this stage? I mean, Apple has kind of planed off. It's come off that kind of took its head of profiles. That was really damaging for the longs trying to trade the breakouts. There's quite a few mosquitoes in this country. If you're not seeing me catch them here. And that key reversal, we made traverse down to this 122.24 area again. The lows this week have been 123.36, so really close. Leverage off of that unfair high before. This is our long-term view. But what do you do with this? Market right now, we're trading 124.25. So again, I'm kind of trying to stay away from the daily situation because we're within a weekly profile. It's a relatively expensive stock. That's a relatively thin profile on the weekly. So the other time frames are really not giving or allowing me to gauge any changes in tone in Apple for the moment. So I'm sticking with the weekly numbers. Stops below 122.24, and again, breakouts above 130.76. And I don't know the way to trade this stock right now. So that's the answer to that email. Let's take a look at ExxonMobil. We looked at this the other day, and we talked about, where's the inflection points to pay attention to. And I just kind of want you to look at how this works. 90-22. We talked about Exxon's not the strongest oil stock in the world. It's kind of sympathetically risen with oil, but stepping back and looking at this thing, I mean, this thing's been a real solid piece of crap since started breaking down technically a while back. So we look for reasons to short this, and we had a reason this week. We reached a high of 90.09, and that top was 90.22, top of the box, 90.22. We're trading $2 lower than that right now. And these are, remember, weekly takes precedence over daily on down the line. And this is another example of letting the market come to you. We talked about this. We talk about our kind of good calls and our bad calls, by the way, so we're not trying to. If you guys, or I'm sure you have, it's actually against the law to send out those newsletters where you send it out to 100 people that the stock's going up and the other 100 people the stock's going down, and whichever you're right, you keep dividing it off and sending them to. It's very illegal. We don't do that here. Anyway, so that's the deal. And what do you do with it now? I think you just continue to look at this from the short side. You've got some targets on the intermediate, 87.50. Target 87.59, which we've almost met yesterday. We're trading 88.21 pre-market. So, and those are daily and for highs. But I fully believe we could just kind of start relaxing back into the 84, 85 area on Exxon. Might not happen in one day, but that's the look. Excuse me. We're going to take a look at something else here. We're going to take a look at Whole Foods one more time. This is what we opened the show with. We got about 20 seconds left. 41.75. For starters, this is a great example of why not to, Kramer seemingly wants to put people into stocks before earnings announcements. And then it's a great example not to do that. Steve Rhodes is next, guys. We're going to pick it back up again tomorrow. You've been great. We'll just pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.